December natural gas prices advanced on Thursday, supported by forecasts calling for colder U.S. temperatures that could lift heating demand. Meteorologists noted that models turned colder for the eastern U.S. for the November 12-16 period. However, this mid-November Arctic blast is expected to be brief, with heating degree days spiking through the weekend and early next week before quickly easing back to near the 5-year average. If the warmer trend is confirmed over the weekend, a price correction next week appears likely, as the market has already become significantly overvalued. Meanwhile, this short-lived cold spell alone does not justify the sharp price rally, as the bullish sentiment is largely driven by strong LNG export activity. Feed gas deliveries to U.S. liquefaction terminals have averaged 17 billion cubic feet per day so far in November, exceeding the record pace set in October. Thursday's weekly EIA report had a neutral impact on natural gas prices, showing that inventories for the week ending October 31 increased by 33 billion cubic feet, exactly in line with market expectations but below the 5-year average build of 42 billion cubic feet. As of October 31, storage levels stood 4.3% above the 5-year seasonal norm, indicating that overall gas supplies remain comfortably adequate. Rising U.S. natural gas output remains a key bearish influence on prices, a factor that the market is largely ignoring at the moment. On Thursday, dry gas output reached 110.1 billion cubic feet per day, marking an impressive 8.4% increase from the same period last year. In contrast, total domestic demand stood at just 79.5 billion cubic feet per day, highlighting the persistent imbalance between robust supply growth and comparatively moderate consumption, a dynamic that may limit further price gains in the near term. From a technical perspective, December natural gas futures are testing a key long-term pivot at $4.35, with immediate resistance at the weekly high of $4.40 and the 200-day moving average around $4.45. A sustained breakout above this zone could pave the way for further gains, though upward momentum has so far stalled. Nevertheless, the likelihood of a downside correction has risen sharply, with a probability of around 70 to 75%, as current price levels appear stretched and market conditions increasingly favor a pullback. On the downside, the first support lies at the short-term pivot of $4.10. A breach below this level would likely expose the 50-day moving average at $3.94. The market is currently at a critical juncture, with price action delicately poised between technical levels and fundamental drivers. Don't forget to leave a comment and check out the ads to support the channel. See you in the next one.